Hey everyone, welcome back to Corporate Decoder, the place where we try to find out if these companies are worth your attention or just burning money for fun before you do. This filing is from FT Vest Hedged Equity Income Fund, but don't let the fancy name trick you. We're diving deep to see if it lives up to the hype or if it's just another confusing investment vehicle. Before we do, if you like getting clear, straight insights from complex SEC reports, destroy that sub button, and don't forget we have a Discord community linked in the description for even deeper dives. Alright, so this document is a private placement memorandum. Basically, it's the sales pitch doc that the FT Vest Hedged Equity Income Fund presents to big investors. Since it's a private placement, they're not selling shares to the general public just yet. The fund offers two classes of shares, A and I, with different fees attached. Class A shares have a sales charge, while Class I shares don't. Keep an eye on this difference as it could affect returns. The goal here is to get good returns while trying not to lose a bunch of money. They're aiming for a high level of current income and potential long-term capital appreciation, while attempting to mitigate the risk of loss of principal, which all funds try to do. They plan to do that by investing in US stocks of companies in the S&P 500, using some options strategies to hedge against market downturns and generate income. Here's a key thing. There's a 2% repurchase fee if you try to sell your shares back to the fund in the first 2 years. That will eat into your profits. Watch out, the managers can take up to 1% of assets of Class A and 0.25% of Class I. Shares annually to the placement agent as distribution and servicing fee. Fees. Now this is a big one. The investment advisor bags an annual unitary management fee of 265% of the fund's net assets. But hold on, they then have to pay all the fund's operating expenses except a few specific ones, which means that fee can be worth much less. This fund estimates other expenses at 8.07% of assets, with $50 million assets under management. Remember, expenses can change and impact your returns. Let's look at the money in, money out situation by checking this table. As you invest, be prepared to pay up to 2% sales charge and 2% repurchase fee. The estimated total annual expenses are a chunky 3.72% for Class A shares and 2.97% for Class I shares. That is a significant amount that this fund needs to overcome in order to make money. This example table shows you the fees as you compare it to other funds. If you invested $100, you will pay in fees $54.2070 Class A and I for $124 X-Team. 580, 72026, and alle 12 all, 1 hintage all, 100 alls is all 56 and 30, 87 all, C5 and 10 doff. Keep in mind that high expense like this can reduce your total return. Alright, so what could go wrong here? Let's dive into the risk factors. These are the fund's way of being like, hey, don't blame us if things go south, we warned you. First, the fund is new, no past performance to check, basically you're betting. Big issue, liquidity. You can't just pull your money out whenever you want. They might offer to buy back some shares, but no guarantee. Markets are choppy lately, thanks to inflation, interest rate hikes, and development in the laws and regulations in the US. Who knows if this fund will swim better than others? The government might step in and mess with things, and that could affect your investments. The fund may not raise capital sufficient to maintain profitability and meet its investment objective. Tax law around these sorts of instruments may be unclear. If managers have any issues, if technology struggles will be a problem for this fund. Distributions could be made of your original funds as returns, which might not be ideal. The fund says we are not telling you absolutely everything, you are on your own at some point. Here are the key people running the show. We have Karan Sood and Trevor Lack as portfolio managers. Both have experience in the area of this fund's operation at OK. So what's my take on this FT Vest Hedged Equity Income Fund CR? First, this fund is complex, so you really need to do your homework if you plan to invest in this. On the upside, it has the potential upside and current income. It will also try to limit losses during downturns. On the downside, you have high fees that can eat into your returns. No guarantee that the fund will reach its objectives and a pretty small amount of liquidity that you can have. This all leads to a very, very risky investment. And if that isn't enough that you shouldn't invest in this, the fund themselves say to only do so if you can sustain a complete loss of investment. The 2.65% management fee is high, and the limited liquidity and high expenses make this tricky. It is also difficult to pull out if you need to. The fund would need to go above its expenses and above inflation just to end up ahead. As for the rest, like the high expense ratios, market volatility and various risks outlined in these reports are boilerplate. Now, I'm not a financial advisor. Do your own research and talk to a professional before making any financial moves. So, what do you think of this private placement? Okay, so what's your take on these numbers and what they might signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.